Hi, everyone. It's Bill and Jonathan with Carolina Capital Management. Wendy is traveling today. Um, our guest Dave is having technical difficulties, so he may or may not join us. But we got some great information for you coming up right after this. Thank you, everyone, for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management, and we are a lender in the Southeast for real estate investors. So if you're looking for a loan for one of your projects, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, we have 3 rules: safety, reasonable rate of return, and simplicity. To learn more, go to carolinahardmoney.com and click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and don't forget Wednesdays with Wendy. Okay, just a couple more pieces of housekeeping. And yeah, Wendy is booked constantly for this Wednesday with Wendy. She gives 30 minutes of her time to anyone who wants to talk real estate.
Yep.
Here's the link to get on her calendar. She's usually booked up a couple months in advance, so go ahead and get on there. We do have a chat either on the right-hand side or underneath your screen, depending on the platform you're viewing us from. So we're always happy to take comments, answer questions whenever we can.
Mm-hmm. We handle criticism pretty well too. So.
No, we don't. We just ignore that. Wendy and I are going to be speaking at Quest Expo coming up. Yeah, it's the end of September. Really excited about that. After COVID, everything was done virtually, and it's always nice to actually be there in person. If you want to go, we have a discount code, Fairman30, knocks 30% off the ticket price. I highly recommend it. There'll probably be 1,000 to 1,200 people there in attendance.
Absolutely.
So even if you don't have an IRA, this is a great way to get education on what you can invest in. And it's a great place to meet other folks who are like-minded. Yep. And that's very important.
Absolutely. If you're considering rolling over your 401k or whatever,
right now, as volatile as the stock market is right now, and you could always convert if you have a 401k, you can convert it to an IRA.
Yep.
And then invest in what you know.
Yep.
Right?
And what you know and what you can touch. Yep.
Also, there's a cruise coming up that Wendy will be speaking on. I know the picture has me and Wendy, but nobody invited me. But I don't mind looking at myself, so you can keep the picture of me on that.
Yeah.
Well, I was in Florida for the past 2 weeks.
I have one more thing.
Okay, go ahead. I'm sorry.
Yeah, you're fine. So something that's near and dear to all of our hearts here, mine as well, but is mental health therapy. I think it hit the forefront for a lot of people coming through COVID. There is a great need for people to receive mental health therapy. It is not taboo. It is great. It is, it is good for you. And we are partnering with a local group here called Therapy Resource Group. They are putting on an event May the 13th at 7 p.m. It's called Bourbon Bubbles. So, bourbon and champagne. There'll be an art show. If you are local to Rock Hill or, the surrounding area, Charlotte, Lancaster, Gastonia, all those, please send me an email, and I can get you set up to attend. They're looking for donations. They are a nonprofit. Like I said, we are partnering with them to help our community receive the mental health therapy that so many people need. Can you throw up that graphic if you don't mind? Perfect. And you can email me at Jonathan, JONATHAN, at carolinahardmoney.com. And myself or my assistant will get you exactly what you need. And like I said, it's a worthwhile event and it's a worthwhile cause. If there's any way that you can help people receive some mental health therapy, please do help.
Yeah, it's especially for children that were kept out of school.
Yeah.
And in masks all this time. There's a lot of issues going on right now, and there has been a lot of stigma attached to it, and really you shouldn't have that stigma attached to it. It's very helpful. You need health for your body. You need health for your mind.
That's right. Absolutely. All right. Well,
so as you can see by my little fishing shirt, I spent some time in Florida last couple
nice
of weeks.
Shiny.
Yes, I'm nice and shiny. It was an awesome trip. On the way down there, I was at a mastermind called the Power Room. It is more of a CEO scaling up and marketing mastermind. I got my picture taken with several minor celebrities.
I don't know. Tim Tebow, is he minor? I don't know. He might be major.
Yeah. I tell you, Tim Tebow is such a nice guy. And he has a foundation too, where he takes both mentally and physically handicapped kids, and he works with churches all along the country and the world to put together a prom night for these folks where they're all kings and queens of the prom.
Yeah.
And it's he does some really good work there. But what I was impressed is there's a line of like 200 and some odd people standing there to have their picture taken with him. And he made sure that he got everyone's name and shook their hand and thanked them for having the picture taken with them, which I know most people would just say, all right, is this over yet? Here.
Yeah.
So I had my picture taken next to him, and I looked like a toddler standing there. I can see why he was such a hard guy to bring down as a running quarterback. He might not have been a great thrower of the football, but he's
solid.
For a quarterback, he made a pretty good fullback.
Yeah, no kidding. No, absolutely.
All right, so let's I do have a little bit of breaking news if you want to cue the breaking news. As you're probably aware, the Fed announced that they are raising short-term rates again by another 50 basis points. And the Fed chair said in his comments that he's certain that we will have when it comes to a possible recession, he didn't believe they're going to have one, but he was calling it a softish landing.
Selfish. That's also why Fannie is reducing its mortgage projections for the next year, because it's going to be a soft landing.
Well, Randy did send me. Randy Vetter is very nice. He sends me articles, Wendy and I, and the headline is that rates are going up and lenders are worried, and I can tell you why lenders are worried, because they have fewer loans to do. Mainly because rates are high. Everybody has been on this refinance kick, and rates have been so low for so long. All these mortgage companies have, kicked up all the hiring. They've got all these people in place, and really people are still buying houses. Okay.
Yeah. Well, when they're available, yeah.
When they can get inventory, they're buying them. That's not the issue. The housing market is not the issue. the lenders have all this overhead now, and they're probably going to have about half as many mortgages going through because nobody's going to be refinancing it.
Yeah, no one's refinancing. But
5.5%.
One of the issues on the inventory side is definitely people who were considering selling because they're like, oh man, I've got this $200,000 equity in my home now. They can't, one, find something, and then two, they're questioning, can I even afford it with the rates rising?
Sure.
So a lot of inventory that would have hit the market is they're pushing pause on it.
Yeah, I mean, I get that. They can sell their house, but where do they go
and then how do they afford it?
If they're going to rent? That's not a great idea either because rents continue to go up. I was looking at some major markets where rents were going up 22%, 20% year over year. That's a lot. That's a lot to absorb.
Do you know what the average rent in Charlotte is for a 1-bedroom, 1-bath?
No.
$1,280 a month.
Wow. Wow.
Yeah.
We need to rent out this stairwell here.
Yeah, it's the rents. So I mean, we have all these things happening. We have still historically strong appreciation, historically low inventory, and now we're in a rising rate environment with all these macro level events like Ukraine and the supply chain issue, all kinds of stuff. I mean, we are experiencing where normally new construction would just step in and fill the gap here. It's hard to do. And it's not even just the supply chain issue on the construction, it's the land price.
And labor.
Well, yeah, that's another one. Yeah.
Yeah, it's going to be a while. And I keep telling this every week. It's going to be a while before we catch up with household formations. We got so far behind. Really, historically, we were doing 1 million or more building new houses per year, 1 million or more. 2009 or 10, I think we were only at like 250,000. So we're never able to catch up. Plus, you have the NIMBY, not in my backyard kind of rules, so it makes it harder for people to build. Not to mention the material cost, the labor shortage, because it's hard to find skilled labor to work.
Yeah.
A lot of people got out of the building industry years ago because it took such a dive. That said, the housing market will remain strong because no matter what, it's still a supply and demand issue. People still want single family homes. You have the millennials that are all now trying to get out of that apartment into a house because now they have families and they need the room. What it's going to provide, and this is my prediction, is that, and with the gas prices being so high, I get it. Most people don't want to get too far out of the city, but you're going to have a lot more people that are working from home already, and I think it's just going to increase because it costs too much to go back and forth to work. And when you can just sit there in your house and do most of that, that's going to be beneficial. So the smaller markets away from the major MSAs are going to remain strong price-wise.
Yeah. Okay.
Does that make sense? People are going to be willing to go out further.
They are definitely
even
willing
with
to go
the higher prices.
They are willing to go up further. The mass migration, like people from New York down to Charlotte, I think that's slowed down. I don't think we're going to see an uptick in that or a continuation. It's already slowed down.
Yeah.
One of the things, so in this rising rate environment, what we think we're going to see and what we all want to be cognizant of is new legislation coming in to try to regulate our space, right?
Yeah.
Because think about it. I mean, as the inventory is constrained, and we're coming up on some important elections, and then we have more elections coming up in the next 2 years. One of the major platforms that I think a lot of people are going to try to run on is affordability and the stopping of the gentrification of these properties. Like people, these fix and flippers, they're going to make those guys the enemy. These fix and flippers come in and they're making the houses unaffordable for the vast majority of Americans. doesn't take into consideration that a large amount of these houses that the flippers flip are uninhabitable or well below code. But I think we're going to see that. And I think we're going to see a lot of people try to put in, legislation. We saw it in California with a 7-year, what if you sell your home inside of 7 years, the capital gain tax up to 35%. I mean, I think we're going to see that. It's just part of it. I think people are going to try to run on that platform and make a name by it.
Yeah, well, I don't think they'll win.
We hope not.
They can always demagogue, but I tell you, the companies that are already doing that, and I'm talking about government, I'm talking about companies, are your technology companies like Open Door, used to be Zillow, but the big companies that are buying your homes online.
Well, they made the wholesalers the bad guys.
Right.
Yeah.
And so their narrative is, you're selling your home the old-fashioned way by doing it through realtors. So realtors are going to be affected. Mortgage brokers are going to be affected because obviously these companies are going to have their own preferred mortgage companies. But they're trying to make it look like this whole business has been a scam for a while, and do it the easy way, kind of like Carvana with buying your car. And
if you sell it to someone else, it's a scam. If you sell it to us, it's legit.
That's right. But you're going to see a lot of that. So the best thing to do is make sure if you're a wholesaler, do the right thing. Show these people when you're out looking for a home, listen to their problems.
Yeah.
Find out what their pain points are and address those. And you're 9 times out of 10, you're going to get the deal because you're going to help them with a problem that they're currently having. Otherwise, you wouldn't be on the phone with them in the first place.
Correct.
Right?
Yeah.
So make sure you don't come across as the shady lowballer. Okay. Find out what the problems are and then explain what you have to do. You don't have to hide this stuff. A lot of people have an idea that their homes are way more valuable than they are, but you've probably all seen the chart where the house from the customer's point of view is, actually the house from the tax man's point of view is a mansion, but the house somebody's trying to buy it from you, it's a little outbuilding. It's pretty cool illustration. Actually.
Yeah. Well, because that's the wholesaler side. The fix and flipper, that really, all of them affect down to the lender side. I mean, but do you think that rent controls are going to be governments are going to try to enforce those with the high?
Well, some states
high rents. There's high inflation, high cost of living. I mean, so do you think people come in and do that?
It depends on your form of government. I've already said this, and I'm sticking to it. We will not do business as a lender in any more blue states. Just won't do it because there's a pendulum that swings, and when the pendulum goes so far to where it's unfair for either party, you don't want to do business there. You want to do business in a place that is just as fair for the tenant or the borrower as it is for the landlord or the lender. And you've got too many states where, we have one in Oregon that we've been trying to foreclose on for damn near a year and a half, right?
Yeah.
You had one in New York where you worked at previously that had been foreclosing for 4 years.
Yeah, sitting on the judge's desk for 2 years.
Who does that benefit?
Well, it benefits the tenant or the borrower.
Yeah, but in the long run, it's not going to benefit the rest of the people there because people like me will say, I'm not doing business in that state anymore.
Yeah, I mean, that's
then
true.
Eventually it's going to hurt the people that they think they're helping.
Yeah, a loss of jobs, all these things get tied to it. I mean, real estate is important. I mean, having equitable laws for both sides is very important.
Going back to that, if you have rent control, why would you invest in any properties that you would rent?
Why would you invest there?
If you're the one that owns the property, why would you invest in that place? If
the
they're
thing
controlling
is,
what you can charge, the market will control it. If it gets too unaffordable, then you're going to have vacancies, higher vacancies, which means you have to bring your rents down in order to keep them full, right?
you know, who was it? Was it Reagan? Who said best thing government does is impede the business? I forget who said that, but yeah, it's like all they do is they create these laws and we're going to help you, and it ends up hurting a lot more than it helps. But no, I mean, you're in a free market. I mean, yes, you're right. I mean,
and sometimes it takes a little longer to work that out, but it will always work itself out.
For sure.
If you continue to raise the rents and raise the rents and raise the rents, eventually people are not going to be staying there.
Yeah. No, you're 100% right.
I think the saying was, the worst thing you can hear is, "Hi, I'm from the government and I'm here to help you."
Here to help you. That's one of the other things that we're looking at is, especially in the term product, and when I say term, it's the 30-year fixed on investor loans like rentals. We're seeing potentially, well, I guess, here's the theory. With rising rates, the volatility behind it, you have all these lower and middle sized firms that are, either holding a warehouse line so that they can build up enough loans to securitize and sell off, or they're white labeling with some other company, which just means they're closing it, but then selling it directly to the company immediately. So we see this happening. And what happened between February and now is these rates just went crazy. No one knew exactly what they're going to do. And they went far beyond the margins of where everyone thought they were going to go, to the point where like the people who were doing white labeling, who they were selling to, didn't buy it. Or if they were warehousing them to build them up to securitization, by the time they built up enough, they were already priced out of the market. Right. So what does that mean? Well, I think there's a lot of people who believe that means there's a few options out there for these companies. They either sell out to the larger companies. So
there'll be consolidation
in the market, or they scale down to become more nimble, or they merge together to increase their buying power. So then what does that ultimately mean? Well, I think that means there's going to be less money in the market for this product, which means pricing probably won't get too much better. It's truly what it is. So I don't anticipate pricing getting better on these long-term investor loans for quite some time.
Yeah, well, all that keeping in mind that it's very important for you to look at your numbers and you make your money on the buy, and make sure that when you are looking at your numbers for rental, that you give yourself plenty of cushion for your the debt portion if you're having to leverage it, and you may want to put more money down to keep that debt down a little bit. But I keep going back to when I bought my first house. FHA rate was 14.5%. People still bought.
Yeah.
But at that point, it was a great time for the private lenders to come in to the marketplace.
Yep.
They could charge a lot less for rent or for the mortgages at that point. So you saw a lot of seller financing in place. So there's always opportunity in any market. There's opportunity. You just have to figure out where the opportunity is.
And where is the biggest opportunity in our market? Where do you think it is? I'll tell you what I think after you tell me what you think.
For me, I think the biggest opportunity is value add self-storage, ground up self-storage, value add multifamily. I'm not so sure on the ground up multifamily because there's a lot to go into that. And then ground up construction on single family, and still fix and flip and fix and hold single family.
Yeah. it's a lot of opportunity.
Yeah.
I like it. I have one. So sorry.
Okay,
Bill.
go ahead.
Uh,
I didn't use it, did I?
no. Build to rent. Build to rent communities, like small build to rent communities between like 10 and 50 units. I think, the supply chain issue hopefully will work itself out, with the war in Ukraine and everything else that's going on. But if you can figure that piece out, build to rent is, we're just primed to explode.
Well, I heard this on Fox Business 2 days ago that, the larger builders are doing this too, and that they had planned, and this is a group of different builders, they had planned for 40 billion with a B in build to rent communities. So the big institutional people are doing it because it's like an apartment complex. It's easier to manage an apartment stuff that's closer together.
Yeah.
When you're buying homes that are spread out all over a city,
yeah,
it's not as easy to manage and maintain those.
Correct. And if you do a build to rent, we can finance the build, and we even have an exit for it. We have a 30-year fixed product for an exit for it. So if that's something that's interesting to you, reach out to us. We want to be on the front end of that product.
And then with our build to rent customers who are doing the building part, and you worry that it takes too long to build the house, and while you're building the price of the house keeps going up. Keep in mind, so does the value.
I also want to say, so our long-term product for that, we can close 2 weeks after we get the certificate of occupancy. So on the 30-year fixed,
nice.
Which I'm not sure too many other guys out there can do that. We can.
Awesome. Yeah. All right. Well, listen, we're a little bit past time. I guess Dave couldn't make it back. Dave was having issues getting on with a.
He was in a tiki bar, I'm pretty sure, wasn't he?
Pretty much. But that's what happens when you try to get on with your phone.
Yeah.
But we'll schedule him for next week, or reschedule him, and Dave does a great job. All right, folks. Thank you so much for joining us on the Real Estate Investor Show, Hard Money for Real Estate Investors. We are Carolina Capital Management, and we are lenders in the Southeast for real estate investors. So if you're interested in financing one of your projects, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab.
And do you only have 3 rules for our accredited investors?
Yes, 3 rules: safety, reasonable rate of return, and simplicity.
Absolutely.
Find out more, go to carolinahardmoney.com, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and don't forget to sign up with Wednesdays with Wendy. All right, guys, I will see you next week. Hopefully Wendy will be with us too. Take care.